Hi, folks, and welcome to our Amazon stock analysis. In our last video, we came up with a projected price target of 29.10, which was short-term and temporary. Lo and behold, Amazon hit our price target of 29.10. And in the last video, I walked you through the process, the methodologies, the principles and techniques that I apply to come up with that short-term price target. And of course, if you haven't seen that video, I highly recommend that you go back and watch it because it's full of information that can improve your stock analysis skill set. Now, many of you are wondering, where do we go from here? Does Amazon continue to the downside or does it continue to the upside? In this video, I'm going to give you the technical analysis perspective and also the financial analyst fundamental viewpoint so that you can see how I apply both skill sets and methodologies to come up with my own projected price move. So again, folks, I hope you find value in this and it helps elevate your understanding of stock analysis so that you can become a more informed investor. So with that being said, let's pay attention here to our screen where I'm illustrating a monthly chart on Amazon. Always look at the bigger picture when you're looking at company charts. Now, why is it important to look at the bigger picture when you're looking at chart? Is because you want to make sure that you're not buying at the top. You want to make sure you're not the first one in. And you want to put the odds on your favor of maximizing your potential return. So as I'm seeing right here, will you be buying at this point right here? Will you be buying at this point right here? So this is what I mean by always looking at the bigger picture. Now, you can also apply Gartley patterns, which can give you an edge in the market. And what does Gartley pattern? One of the main principles is that your first move equals your second move. So let's draw this right here so that you can understand it from a principle standpoint. So you first have the first wave move up on the stock. It could be catalyst, fundamental reasons, whatever the case may be. Then you have a temporary pulled back, profit taking, shaking off the weekends. It might be geopolitical news or economic risk to the downside. Whatever the case may be, you might get a pullback on the stock. And then longer term, the uptrend trajectory will continue because of the fundamentals of the business. Therefore, your initial starting point would be your A point. Your inflection point on your first move on the stock, right here at the top, would be your B point. When you find support, when you find a footing, that will be your C point. And then the continuation to the upside would be equals to your first wave from A to B. So this would be your D point. In other words, your A to B move equals your C to D move. So this is your first wave follows your second wave. Okay, this is very important. Now, how does this apply in real practice? Let's look at Amazon. If we see the initial A point on Amazon, we can draw it right here. We can say that this is the A point, all right? And it had a nice circular bull move for several years. How many years? Well, if we take the middle of 2014 all the way to now, I mean, this is 5.5 years of a circular bull move on Amazon. So we have our A point, okay? Our B point is the top in late 2018. And then this follow a correction of about 25 or 30% correction. Then the footing or your support point is your C point, all right? And of course, your A to B equals your C to D move. This would be your D point. A to B equals your C to D move. Okay, so now what am I anticipating? I'm anticipating a further move to the downside on Amazon. Now, how much can that move be, right? If we draw this out right here, right? How much further can the stock come down and then gives us a great opportunity to buy? Where would that C point be established? So we have to be forward looking. We have to anticipate this move and we have to think in terms of probability. When you're investing in the market, nothing is guaranteed, nothing is absolute. So you have to think in terms of probabilities, okay? So where do I think the stock can come down looking at the bigger picture? So one of the tools that I like to use is Fibonacci Retracement. So let's look at Fibonacci Retracement. Let's take our C point right here, okay, and measure the completed move from C to D. And with not Gartley pattern, I should say Fibonacci Retracement. my support point, where can the stock find a bottom? It could be between the 38.2 and the 50-point retracement. This is where I like to look at it. So let me draw this right here. And here we have this inflection point, this zone right here, which is between 2468 and 2753. This area could be a strong support point for Amazon to find a footing before it continues its longer term trajectory to the upside, provided that the fundamentals are strong. So let me clear all these drawings right here and go from a monthly time frame to a weekly time frame. Okay, so this weekly time frame summarizes what has happened over the last year in this time frame, okay, for 2018. And we can see that Amazon has actually been correcting for the past 2-3 weeks. And last week we actually got a bounce. But if the overall market, so now I'm changing to another indicator, which is the Qs, the NASDAQ. So let's quickly look at the Qs. And you can see that the NASDAQ has also been pulling back. So it's parallel to the move of Amazon. They coincide each other with one another. I mean, it's almost a mirror image. And I'm in the camp. Let me switch here to a daily time frame. I'm in the camp that the overall market, specifically the Qs, still have room to the downside. I think the Qs will still continue lower and maybe find some sort of support area right over here and right over here. Okay, now I'm using swing points. Previous resistance points become support. So this right here also coincides with my Fibonacci retracement of a 38.2 and the 50% retracement. I think that there is a 60% probability that the Qs will come to this point right here, and a 40% probability that we might probably continue higher. So I'm in the camp because of election, because of a weak economy, and several sectors of the economy being an anchor to the overall market, like the restaurant industry, like the airlines, like energy, like the travel and tourism industry. Those sectors are in depressionary environment. And of course, the upcoming election, it's going to create an environment of uncertainty, creating more volatility and more room to the downside on the overall market. So that's why I think that we still have more room to the downside, and there is a 60% probability of that outcome. So how do we take this information by interpreting and analyzing the NASDAQ, the tech sector, or the tech index, and apply it to Amazon? Well, if the market is going to continue lower, guess what? Amazon, the probability of it also continuing lower increases. I think there is also a 60% probability of Amazon coming down to this area right here before continuing to its longer term trajectory move. Okay, so now I've given you the point of where I think Amazon can come down to. I think this area right here between, if we really want to map this out, between 2753 and 2500 could be a support point where you can start maybe nimbling a little, maybe take 10% of your position at the initial point it gets here, then maybe another 20 or 30% of the position that you want to take on once it's at 2500, and then you basically let the market correct before we get the next move to the upside. And of course, you want to set your stop losses in place in the event that this analysis doesn't work, because nothing is always going to work 100% of the time. So this is what I'm anticipating. I'm anticipating Amazon to come down to this area. Now, once it comes to this area, what is my longer term price target? Where can Amazon potentially go? So let's revert back to a monthly time frame, and let's see. Let's calculate or actually draw our first wave point, which started in the middle of 2014. Okay, so this first initial move, okay, and the same move, I'm going to create a parallel line and draw that from up here. This is the current one that we just experienced. Okay, there it is. And this whole wave, I'm also going to create the parallel line on this one and map it out in the middle of my channel and see where it can go, provided that this move materializes and moves up, and then of course breaks resistance. So folks, this is a major move to the upside. If we really look at this, this can bring us close to $5,000. That's a huge move to the upside. But this is only technical analysis. Now let's apply the fundamental part of the equation. Let's look at what a financial analyst would look at to anticipate or come up with a price target. So let me minimize the graph. And I've already done this in anticipation to this analysis. So what I'm going to walk you through right here is first a brief overview of the financials of Amazon and what Wall Street analysts are projecting. Here's revenues, okay? Look at the growth rate from 2019 to 2020, then 21, then 25. Here it is. 31% for 2020, 18% for 2021, and again, 18% for 2022. So top line revenue growth for a company the size of Amazon, it is strong. This is still a growth story. Look at the earnings per share number, EPS on a GAAP basis, growing at 36%, 39%, then 42%. On a normalized basis, 38%, 40%, and 41%. Now, if we apply simple trading multiple analysis, we're doing now comparable company analysis using sales multiple valuation, okay? If we assume that Amazon, the market will pay 5 times for their sales multiple, where am I getting that 5 times from? Well, look at the industry. When we look at the industry, sales multiple average is between 5.8 and 6.6. Look at Amazon comp list. Now, where am I getting this information? This information is coming from Capital IQ database, all right? You can see similar companies and where they're trading at, how fast they're growing. Amazon, on the other hand, the market is currently paying 4.9 times. And we can make the argument that Amazon should be trading in line with the industry. Why? Because look at revenue growth rate. Look at the revenue growth. The industry is growing between 10 and 15%. Amazon is growing revenue at 27% based on Capital IQ numbers. Look at EPS, growing at 35%, much higher than the industry, okay? And the market pays 2.7 times for the earnings per share growth than everyone else in the industry. You can see right here is between 1.6 and 2 times, okay? So we can say that Amazon is best of breed. It deserves a premium. It is the best company in this industry. They're growing faster than everyone else. They have very strong margins, so they do deserve a premium. So I'm just assuming right here for this growth, if we go back to the financials, 5 times sales multiple. So we take the 2020 estimated sales, we multiply by the 5 times multiple, we get an implied enterprise value, we subtract our cash, we actually calculate net debt by extrapolating cash to our total debt amount to get net debt. And then we take our net debt and subtract our enterprise value to arrive to our equity value. Now, as a shareholder, we care about the equity value. We take equity value divided by the company's shares outstanding, and we get an implied share price. The implied share price using a 5 times EV over sales multiple is $3,639. That represents an 18% upside from the current stock price as of Friday's close, which was $3,095. If we apply the same methodology for 2021, look at the projected price move or price target, $4,290. And if we do the same thing for 2022, we arrive to a $5,000 projected price target. So the fundamentals are strong, and simply applying a sales multiple valuation methodology suggests that over the next 24 months, Amazon can actually hit $5,000, guys. They have the growth behind sales, they have the growth behind earnings, and they also have the momentum on the stock, okay? Now, let's apply another metric or another valuation methodology to the earnings per share using PE multiple, okay? So if we use a PEG ratio of 2, where am I getting this PEG ratio of 2? Well, from the industry. Right here, the industry for the growth rate of earnings per share, which is this right here, the industry on average pays 2 times for the growth of tech companies that are deemed competitors to Amazon. And the market is paying 2.7 for that growth rate. So I'm just going to use the industry average. I'm just going to say 2. So if the market is paying 2 times for Amazon growth rate, this growth rate that we're seeing right here, 40%, if the market pays 2 times for this growth rate, the implied PE multiple will be 80. The current multiple that Amazon has right now is 94. So I am actually being conservative with a multiple of 80 on Amazon earnings per share. So if we take the expected EPS for 2021, okay, multiply by 80, we get an implied share price of $3,500, $3,562 to be exact. That represents a 15% upside. If we do the same thing for 2022 earnings, okay, the PE multiple would be 82 times. Multiply that by 2022 EPS, which has a growth rate of 41%. That gives us a price target of $5,173, which essentially represents that 67% upside on the stock. So I can see, using fundamental analysis, using the growth factors, and simply applying multiple valuation, I can see Amazon being a $5,000 stock. Now, of course, we're going to use a blended approach here. We're going to take our 2021 implied share price, and we're going to take our 2021 implied share price on a PE basis and on a sales basis, and we're going to take the median of the two just to take a blended approach. And I arrive, let's round this, and I arrive to a $3,926 price target on Amazon using fundamental analysis. So if we just simply round this to $4,000, I can make the argument that, look, the business model that Amazon has created, especially e-commerce, same-day delivery order systems in place, and people staying at home and just doing online shopping, it has benefited Amazon tremendously. And if you want more evidence of that, pay very close attention to what I'm going to show you right now. Here, you could go to Yahoo Finance. And in Yahoo Finance, there is a section known as Analysis. If I click on this Analysis tab up here, okay, you can see what the average analyst on Wall Street is expected sales numbers to be, and also earnings numbers to be. But here's something that's very interesting. Look at the EPS trend. Look at for 2020, the current year, and also next year. Analysts that cover Amazon are rising or raising their guidance. Look here, 90 days ago, earnings per share for 2020 was expected to be $18.82. 60 days ago, that number increased by 10 cents, $18.92. But look at what happened over the last 30 days. That number, it's up significantly. It went from $18.92 to $31.60. Then it increased to $31.61 and then $31.66. So analysts are raising their guidance on Amazon. So this is a very strong signal that the fundamentals of Amazon in this current economic environment, it is strong. Look also for next year guidance. They're raising their guidance. They are raising. So you want to get ahead of this move. But of course, you have to apply technical analysis to increase your entry point from a tactical standpoint, so that as soon as you buy the stock, you're buying it at the highest probability of it moving higher and capping, limiting your downside. So I've given you the fundamental analysis viewpoint. I've given you the earnings estimates and the trend, which is up. They're raising their guidance on the stock because fundamentally the business model is just sound, and the economic environment that we're in favors Amazon. And when you apply technical analysis and look at the chart, you can make the argument that, hey, look, the stock can definitely come to $4,000 and even potentially $5,000. So I'm in the camp that temporarily, short term, the stock can still come down to maybe this area right here, wait until it comes down to this range. And if it's in this range, maybe you can start taking a position for the next wave to the upside, which can potentially take the stock to resistance point right here. What is this? 38, 35, let's say 35.50. This would be the first milestone. Okay. $3,562. $550. That would be the first milestone. Maybe zigzag here and then move to the next level, which would be $4,000. I think this can definitely happen. From a probability standpoint, 60 to 70% that this might play out like this. And they normally don't play out exactly this way. Maybe we have probably seen, if I change my time frame to a daily, maybe we might have seen the bottom on Amazon right here, right? If I look at a shorter term time frame, I can draw support right here. This is support on Amazon. Maybe we've probably found the bottom right here. And if the market rolls over, maybe Amazon would just consolidate down here and then move higher once the correction ends and the next wave to the upside in the market has occurred. So this could be scenario number one. Scenario number two would be that Amazon comes to this area and consolidates and then moves higher. That would be scenario number two. Scenario number three would be that Amazon fundamentals are not as strong as we are interpreting. And then Amazon zigzagging here would just continue moving lower. This will be scenario number three. So I've given you the longer term analysis looking at charts. I've gave you the fundamental perspective by looking at earnings estimates, applying PE and sales multiple valuation, and also looking at the competition so that you can make your own decision on which direction do you think the stock can go. How am I going to play this? I'm just going to keep watching the stock temporarily. And of course, I'm more of a shorter term trader. And sometimes I do take longer term positions, but don't follow me blindly. Don't take my own recommendations. Do your own homework, because my time frame and my outlook could change in a day or in a week based on how the market is releasing information. I am constantly evaluating charts and the markets and interpreting such amount of information that I can change my mind like that quickly. I am very flexible and I have to be very, very nimble. But with a company like Amazon, when I see the fundamentals and I see the growth story, yeah, I think there's a higher probability that the stock might hit $4,000 maybe in the next 6 to 12 months, provided that the market corrects and then we move higher from here. And you have to pay very close attention to the NASDAQ, to the Qs. Is this the bottom? I don't think so. I don't think we're done in this. I think there's going to be more consolidation and maybe more volatility where it may give us an opportunity to buy at a lower price point. And don't just take this analysis at food face value. Look at historically what has happened. I mean, look, let's change to the weekly, right? The same situation occurred in 2018. Look at this move in the fourth quarter, okay? Then we have this right here with coronavirus. Now we're getting to see it, but is this the end of the move? I don't think so, folks. I think the election, I think the divisiveness, the social instability within certain major cities in the economy, it's concerning to investors and to the overall market. So pay close attention to what's happening and don't be the first one in, right? Have a plan, have a process for you to take your own investment ideas and execute it. I'm just giving you a different perspective to look at the market so that this can help you, not just with Amazon, but with any other company that you may have in your portfolio or any company that you may be thinking on buying. Apply this process, apply this methodology, which would help you become a better investor. So with that being said, folks, I hope you found value in this. I hope this helps you, again, elevate your understanding. And with that being said, stay safe, stay healthy, and I'll see you in the next one. Take care.